When is the bull market? In today's video, we will see what a bull market is and the market's current scenario. Let's begin. What describes a bull market? A bull market is a situation wherein prices have increased or are expected to increase in a financial market. The term bull market is most commonly associated with the stock market. Still, it could also refer to any tradable assets, including commodities, real estate, bond, and currencies. Because stock prices rise and fall almost constantly during trading, the phrase bull market is reserved exclusively for long durations during which a substantial percentage of security prices is rising. Bull markets can last months, if not years, at a time. Bull markets are characterized by the high levels of positivity, the confidence of investors, and preconceptions that solid results will continue for a long time. As a result, it's tough to anticipate when market trends will shift regularly. However, part of the problem is that psychological factors and pure conjecture can sometimes significantly impact the markets. There is no single metric that can be used to define a bull market. Nonetheless, the most general way a bull market can be defined numerically is that a bull market is a period in which equity prices increase by 20% after a significant 20% drop and then before another 20% drop. Because bull markets are hard to predict, technical analysis only notice them after they have occurred. Between 2003 and 2007 was a noteworthy bull market in recent times. The S&P 500 accelerated by a massive margin after just a prior decrease. However, as the financial crisis of 2008 unfolded, major declines resumed after the bull market uptrend. Characteristics of a bull market. Bull markets typically occur when the financial system is either bolstering or is already pretty strong. They are more likely to happen in a robust gross domestic product, a decrease in unemployment, and a rise in company earnings. Investors' confidence in the economy will also increase during a bull market. As a result, the overall demand for stocks and the general atmosphere for the market will be optimistic. Moreover, during bull markets, there would be overall growth in the number of IPOs. Current market scenario. Even though coronavirus-related ambiguity and rising prices challenged the equities market, markets still ended 2021 with more than 20% gains. The driving forces for at least the first half of the year 2022 could include soaring valuations, the likelihood of monetary and fiscal policy normalizations beginning in early 2022, the possibilities for a short-term economic disruptions due to the COVID-19 pandemic. On the other hand, equity markets are expected to bolster cash and bonds, although with lower returns. So, what are your views and predictions regarding the current market scenario? Let me know in the comment sections below.